A massive crash warning, as the Federal Reserve has indicated, pain is to come. I have all the details and what you need to be aware of right here in the video, so let's get right into it. All right, now recently the chairman of the Federal Reserve, Jerome Powell, was out in a speech indicating what the Federal Reserve is going to do to bring down some of this elevated inflation we've been dealing with for a very long time. Well, he indicated that this is going to cause pain for firms and for households. He also did indicate with inaction, in other words, not doing anything about this, would actually cause even more pain long term. So in other words, what he's saying is that short-term pain now is actually going to lead toward long-term gain in the future. Now, what he means by all this is that the Federal Reserve is going to continue raising interest rates very aggressively going forward. In fact, I was just reading some more reports out there right now. They're actually anticipating that the federal funds rate, which is the rate that the Federal Reserve continues to raise, is actually going to be over 5% by next year in 2023. That's pretty high, considering right now it's at a range of 2.25 to 2.5% right now. So we're probably going to double these rates within the next year or so, possibly even more in 2023. So if you think things are expensive right now, as in interest rates are very high on loans or mortgages or auto loans or anything out there right now, refinancing, literally anything out there, credit card loans or credit card debt, anything like that, it's only going to get more and more and more expensive. So the chairman of the Federal Reserve, Jerome Powell, was out in this speech as he was speaking from Jackson Hole, Wyoming, and he was actually indicating that yes, this is a major concern with all of this massive inflation, and the Federal Reserve is very much committed to bringing this inflation down to their 2% range target. Now here's the thing, as of the last inflation report that we got out a few weeks ago, inflation was coming in at 8.5% as the headline number. That's still very high. That is 6.5% higher than what they actually want it to be. 2% is their target. Yeah, we're in for a long road ahead of us right now, okay? So the Federal Reserve is likely going to continue raising rates very aggressively going forward. Now, when it comes down to the 75 basis points like what we saw in June and July, we may be seeing that again in September. However, the chairman also did indicate that it's going to be based on economic factors and what actually happens around that time when they meet in mid-September for their next FOMC meeting. So again, that's going to be another very important announcement to see, are they going to raise rates by another 75 basis points like what they did with their last two meetings in June and July. Otherwise, it may go down to about 50 basis points, but we do know for a fact probably 50 basis points might even be the minimum that they would go. I've even seen some talk out there that they may even implement a 100 basis point, 1 full percentage point rate hike with their next meeting. And again, it's going to be based on economic data that they see with their next, as they approach their next FOMC meeting in mid-September. So, wow, I mean, seriously, we are in a serious situation right now. So, let me point this out for you, because you might be wondering, what do I mean by pain? What kind of pain are we dealing with here? Now, let me break this down for you. Here's what it comes down to. In other words, interest rates will continue to rise. So if you have credit card debt, if you have any types of adjustable interest rates on any type of debt products, maybe like an adjustable rate mortgage or credit cards or any types of maybe like a home equity line of credit, things like this, anything that has an adjustable interest rate that is not a fixed rate, it's going to continue moving higher and higher and higher. If you're in the market to buy a home right now and you're looking to lock in maybe a 30-year fixed rate mortgage or a 15-year fixed rate mortgage or any of the other fixed rate mortgage products out there right now, before you lock in, that is going to continue moving higher and higher and higher. In fact, as of right now, we're sitting a little over 5.5% on a 30-year fixed rate mortgage. That's a lot, considering we started the year out sub 3%. So we've gone up a lot. We've almost doubled interest rates on a 30-year fixed rate mortgage just so far this year alone. Interest rates are going up. It is becoming way more expensive to borrow money right now. And that's the whole intentions behind the Federal Reserve. They want to make it more expensive to borrow money so that we, the people, consumers, and businesses stop borrowing money and plowing that money into the economy. They want us to stop spending money. That's the whole reason behind this. They're making it more expensive to borrow money, so they're basically saying, hey, please don't spend money right now. We want to cool this economy down. And as a result of this, we already know this is going to cool the economy very substantially. So we'll have to continue watching the Federal Reserve very closely here going forward to see what they do with interest rates. But they've already indicated they're in this thing for the long haul, and they're going to go at it until they bring these bring interest rates back down to their benchmark of around 2%. 2.5% is their benchmark. So Yeah, wow. I mean, seriously, we're in a long road ahead of us, and it's just going to get even worse going forward. Now, here's the thing. I don't want to be here and say doom and gloom is on our doorstep. I don't want to be that guy. But at the end of the day, I do want you to be aware of what's going on here because this is going to impact literally everybody. I mean, let's be real right now. Does everybody here have at least a little bit of debt or something? Or maybe do all of us, want to maybe float a balance on a credit card? Or are we trying to buy a house? Or are we trying to buy a new car? Or are we trying to maybe refinance, or all kinds of the different things out there? Any of this out there right now, again, it's all just going to cost more because interest rates are jacking up the price of that debt by raising the interest rates, right? So that's what it's all coming down to. So at the same time, as a result of this, there's likely going to be a lot more layoffs going forward. So just want you to be aware of this. I'm not saying that I hope for this to happen. I certainly don't want this to happen, but this is the fact of the matter. So as a result of this, as we continue to see interest rates rising like this, we're going to see a lot of businesses and corporations and companies out there saying, we got to conserve capital. They need to conserve capital to weather out the storm, right? So the same thing with businesses. When they start to see a major storm cloud on the horizon, they need to kind of make sure that they're going to be able to weather through the storm. That's the same thing with companies. So as a result of that, they start laying off a lot of people to take all that money that they would be plowing into payroll and start bankrolling that money and holding on to it to weather out the storm, to make sure that they have enough cash on hand to make it through the other side of the storm. So we're likely going to be seeing a lot more layoffs going forward. We're going to see this economy come grinding down to a halt. This economy is going to slow down substantially in regards to what was said and the remarks coming out of the Federal Reserve Chair, Jerome Powell. So interesting, right? These are some pretty big announcements. Well, as you can imagine, on the back of these announcements, yesterday, the stock market sold off by about 3% across the board, depending on the indices that you were looking at. They were all down about 3%. Again, the Dow Jones, the NASDAQ, the S&P, the Russell 2000, all four of these, which is the four of them that I watch very closely, all of them down solidly over 3%. Now, by the way, if you don't watch the financial markets very closely, that's a lot, okay? Generally, the markets move maybe like 1.5% would be like, doesn't really matter. That's not that big of a move. It's not that big of a deal. But when we get into 2.5, 3, 3.5, 4%, that's a big move in the market, okay? Anything I would say above about 2% is a pretty healthy sized move in the market. And we got over 3% across the indices yesterday. So that's something else we can indicate is that investors are not loving this, knowing that this is going to slow the economy. It's likely going to slow earnings for companies. Therefore, investors are thinking, hey, if companies are having less earnings out there or having less revenue and less profits, that just means that, well, do I really want to be invested in their stock? You know what I mean? So that's why people are selling off on their stock. So this rally that we've been seeing here over the last few weeks, as I've been talking about, likely just a bear market rally, and that's probably exactly what it's turning out to be. So we'll have to see here going forward to see what actually happens. However, let me share with you a couple of the reports that I came across that I want to share with you interestingly enough as well. So another new report that came out is showing that 1 out of 20 people, so 1 out of every 20 people are indicating that they are suffering. So not struggling, but the words that they're using is suffering. Those are the words that they're using in this poll. So 1 out of 20 people right now are indicating that they are suffering right now in the United States. What a sad thing. I mean, seriously? We claim to be like the richest country in the world. We're apparently the most affluent country in the world. We're the land of the free, and we have 1 out of every 20 people that are suffering. I don't know. Something about that seems really screwed up to me. But again, that's just my opinion on it, right? Wow, that seems really, really bad and really, really sad, to be honest with you. Next, I want to share with you another report out there as well. This other report is indicating 20 million households are behind on utilities right now. That's a lot. So here's the thing. This report that I was reading about this was actually indicating we're likely going to be seeing a tsunami of shutoffs with utilities here over the coming months. Well, that's not good either, because let's look at the calendar for just a second here. We're going to be in fall in a matter of just a couple weeks here. We're going to be falling into fall. Well, guess what happens then? It starts to get cold. Depending on where you're located around the country, obviously in the south, it's probably going to stay warmer for quite a bit longer. But in the northern portions of the country, it starts getting cool out in September already, right? October, you're probably thinking about turning the furnace on pretty quickly, right? Yeah, that's what happens in the northern part of the country. If we're starting to look at some of these shutoffs because 20 million households are behind on utilities, that's not a good situation, right? That's exactly what they were saying in this article that I was reading about this. 20 million households are behind on utilities, and they're calling it a tsunami of shutoffs. Again, that's scary and really, really sad, right? But again, it goes to show what's actually really going on right now. So let's look at the real picture and look at the picture from a maybe 10,000 foot view to see what is actually going on here. Well, what are these pictures painting for us right now? The pictures are painting that, okay, 1 out of every 20 people are suffering, and 20 million households are behind on their utilities, potentially even facing shutoff. What does this mean? It simply means that people do not have enough money right now, and the money that they do have, they're using on higher priority items, right? Because here's the thing. I think all of us can probably agree, we spend the money that we have available to us on the highest priority items first. Whatever that is for you, it's going to be different for everybody. Maybe the highest priority item for one person is paying their rent. Maybe for somebody else, it's putting food on the table. Maybe for somebody else, it is paying their phone bill. Maybe for somebody else, it's getting some dog or cat food to make sure that their animal has enough food. Things like this. Again, the priorities are different for everybody, but we spend our money first on the highest priority items, and then it trickles down. The second highest priority, third highest priority, fourth highest priority, down the line, and eventually it gets down to things that are lower priority. Well, guess what? With these reports that I'm talking about right here, it's clearly indicating that people are not able to pay their utility bills because it's probably down on the priority list, maybe 3 or 4 or 5 notches down on the priority list. Therefore, the money's all dried up by the time they get down on the priority list that far, right? So they pay maybe the rent or the mortgage. Maybe they put some food on the table. Maybe they pay the phone bill. Maybe they pay for some gas in the car. And then all of a sudden you think, wait, there's no money left to pay the gas bill, the electrical bill, things like that. So now we're looking at all of these 20 million households that are behind on utilities and potentially facing shutoff. I don't know. You kind of see the progression here and how this whole thing is working out. It all simply comes down to too much inflation. We're all getting whacked every time we go out to the store to buy anything. Our money is not getting us anything anymore. A little bit, but certainly not what it did a year ago, year and a half ago, 2 years ago. $1 a year ago, $1 a year and a half ago, or even 2 years ago went a lot further than what it does today. It's nuts, these prices on everything, right? So as a result of that, it is siphoning out all the money out of our pockets, out of our bank accounts, and unfortunately, people are not having enough money right now as they were scraping by a year ago, scraping by a year and a half ago, and now all of a sudden here we are, and people are behind, right? Underwater. Not a good situation. Anyway, I wanted to share this with you. These are some of the reports that I came across and those remarks out of the chairman of the Federal Reserve, Jerome Powell, for the Jackson Hole speech out of yesterday, Wyoming. And again, I just want to let you know what's going on here because this is very important information that we need to watch going forward because as I've been saying for so many months now, I've been saying this for a long time, the big one is coming. The big one's coming. Watch out. Crash. It's over. It's done. This is it. We're going to see something massive here. Well, guess what? This was basically all just indicated and confirmed by the chairman of the Federal Reserve. Again, one of the most influential people out there when it comes to economics, the economy, the United States, as well as the stock market, stuff like this. He's a very influential person. The chairman of the Federal Reserve, Jerome Powell, is a very, very influential person, right? So again, he basically just indicated all of this that we've been indicating. So the next few months here going forward into 2023 are probably going to be pretty rough for a lot of different reasons. And again, I'm going to be here for you no matter what, right by your side. I truly want to help you out in any way that I can. I'm going to give you a little hint here. Go back and watch some of the recent videos here. If you fall on the right ones, again, watch a few of them here recently. I'm giving out all kinds of stuff recently. I'm sending out packages to your door to help you out with some of the necessities. I'm sending out cash drops. I'm sending out money. I'm doing all kinds of stuff to help you out in this community. So do me a couple favors here. Number one, make sure you subscribe to the channel if you haven't done so yet. It's totally free to do so. There's a button right down below the video. Make sure to hit that and subscribe to the channel. Next, go back and check out some of the other thousands of videos here on the channel. Again, most of the recent ones here, you'll fall on a couple of them here that are pretty good. And again, I'm sending out tons and tons of packages to those of you here in the community. And of course, those cash drops. And of course, share the videos with your friends, family, social media. Stick with me. I'm going to be here for you right by your side this entire time and help you out in any way that I possibly can. I know it's tough out there. I know money is tight, but I am here for you as your one and only daily advocate. Again, thanks so much for joining me. Please subscribe down below if you haven't done so yet. Share the video. Go back and check out the other videos like I mentioned and enjoy your day. I'll catch you again later in the next one. I hope this